Welcome Tuesday morning on the floor of the New York Stock Exchange. Tomorrow is the big day for the Federal Reserve. We have the press conference from Bernanke at the end of the FOMC meeting. We're going to talk about all this with my guest here on the floor of the New York Stock Exchange, Mark Otto, designated market maker at Night at Capital Americas. Mark, welcome.
Thanks for having me back.
So, Mark, tomorrow is the big day. The market has been speculating, a very, very nervous market. We saw it yesterday where, some speculation came from the FT and the market kind of panicked at the end of the day. Now, Dow Jones up over 100 points. Volatility still going on probably for the rest of the day until tomorrow?
I would think so. We've seen massive swings in volatility, triple-digit swings over the past week or two. So the market doesn't like uncertainty, and that's what we're having right now. There's a lot of speculation on what's going to occur tomorrow. I think people are going to be looking for the language in what Ben Bernanke says. In the past he says unemployment at 6.5%, a dramatic improvement in the labor market. This is the type of language or lingo that people are going to be looking for to try and decipher. Majority of traders that I speak to think that the unwind or any action taken won't happen until September, October. The majority of people that I speak to are thinking it's going to be more towards the end of the year.
Whenever it's going to be either the fourth quarter or the beginning of 2014, transparency is the key, I think, at the moment. As you were saying, Bernanke is already being pretty transparent, giving at least a target for unemployment and inflation, for the moment that the stimulus should stop. But a lot of people are expecting from tomorrow even more transparency, like Bernanke giving a set date when they will start acting. Do you think it will be good for the market, or we risk the market could just panic until that day?
I think it would be great for the market if it were that transparent. However, most traders I speak to don't believe that's going to happen. I think that most people are thinking that his lingo is going to be more cryptic, leaving him more options on the table and the ability to react. One thing that I don't understand is the majority of reports that I have read indicate that they're looking at an unwind and a tapering starting from like 85 billion a month, which is where it's at now, to about 50 billion a month. I think
it's a big cut.
It's a big cut. You would think that if they were so worried about a dramatic reaction in the market, that they would unwind at a slower rate and start sooner. Perhaps start sooner in September, or say. And start unwinding at a smaller rate, maybe 75 billion from 85 billion, to sort of test the waters and get people warmed up to it. However, that's a big question mark, and hopefully we're going to get some clarity tomorrow.
And that way you can actually control even better the market reaction, because if you taper, let's say, $5 billion a month, and you see that the market is reacting correctly, you can carry on, or if the market panics, you can always change your mind and go back.
Absolutely. I think it definitely gives them a lot more latitude to adjust. However, smarter people than me are thinking about this situation and taking in an incredible amount of variables. So
it's just a lot of politics too. We know that. Anyway, the strategy that you were mentioning is being called by some people the turtle strategy. So the Fed will stay in its shell, and it's just keep using the same language and continue monitoring the data. This morning we saw more economic data, and actually some of them were disappointing from a sector, the housing sector, who has been doing pretty well. What do you think about that?
it was a disappointment. However, it seems to be overshadowed. Obviously the market's up 100 points right now. I think part of that's due to the fact that the German zoo indicator came out stronger than it had been forecast. Even though right now the European markets are trading mixed and we're trading higher, I think the market's just waiting for tomorrow, and it's sort of overshadowing anything.
Yeah, that's right. But still, economic numbers are still there. But probably we're going to start monitoring again from Thursday.
Yes, absolutely. I think the one alarming piece of information was actually out of China. So foreign direct investment came in at a 4-month low. The other alarm bell went off with real estate in China. So last report was 68 out of 70 cities had seen a rise. So this report showed that 69 out of 70 cities had shown a rise in real estate. So that some people may say, well, that might be a good thing. However, China has tried to ease the real estate market and prevent any sort of bubble from bursting over there. They've put in harsh property curbs, and they don't seem to be working. The Chinese are very limited as to where they can put their money. It's generally in the market, high yield wealth management products, or real estate. So I think that we may see down the road, now that the Premier has lowered their GDP forecast for the end of the year to 7%, that you may see more property curbs put in place, even harsher than what they are now. So it's unfortunate. Most people in China don't want to hear that type of thing. However, that is definitely a concern. Real estate in China connects to about 40 different sectors of business. So it's a critical part of their economy.
It's a big part of an economy. Now, just very briefly, we were saying that volatility probably is going to stick until tomorrow. Have you noticed any difference, yesterday and today, like low volumes, not much interest, and a lot of nervousness?
Yes, all the above. It's been the same trend for about 2 weeks now. So I think that right now, we've actually just breached a level of 1642 on the upside. We're going to be looking at 1658 and 1669. Support going down from here is 1631, 1613, and then 1607, which is a 50-day moving average.
And we'll wait for tomorrow and see all this level. Thank you very much, Mark, for being with us.
Thank you.
And thank you very much.